So in this video, basically in this video, like I said on my previous video, I said I'm going to show you actually a way of how to actually maneuver when it comes to trend lines. This is the first video. I wish I could have done a long video, but I cannot do a long video simply because when I do a long video, most of you don't watch the whole video. You skip spaces within the video, of which now you don't understand what I'm really saying. So I'm trying to make this video as short as possible, right? So that you can be able to grasp as much information as you can. And then on the next video, I will go through charts, right? Whereby I will show the real examples on charts and then you'll be able to see it then. But for now, we're just going to be this white screen, right? So that I can explain here. And then on the next video that I'll post maybe Friday or Saturday, it will be chart examples and then you will combine the two and then it will be basically your whole concept of trend lines, right? So I'm just going to take a 4 minutes of your time to explain, right? So we have two types of trend lines that actually you can try and get a trades from them, right? One, it's called a bounce back, right? What does that mean? That simply means that the trend line, when it breaks, oh, sorry about that. So when it breaks, basically it won't continue going up. It will simply just push back down, right? So now your question is, how do I know whether this one is going to be a bounce back or it's going to be a breakout, right? There are three things that you need. You need a higher high and then a lower high, right? And then you have a lower low. Those are the three main things that you need, right? And then you use the tool called the channel, right? Exponential channel when it comes to MetaTrader. I'm not sure about trading view, but they do have a tool called channel. You put it when it's an uptrend, basically trying to get a buy signal. You put it on your higher high and the lower high, and then you put it the other side, you put it on your lower low, right? And then you look when the market breaks out, right? You look at the last lower low, right? Whether did it close below your channel or it closed above your channel and then went straight to break out, right? So here's the thing. You look whether the last lower low, did it close below the channel, right? Like this, something like this, right? And then change, start going higher and higher and higher, right? If it did this and then it breaks out here, right? Just know that there is a 90% chance that it will continue its way going high, right? But if like here, it didn't touch, it didn't break, right? It didn't break, it came down here and then started changing its direction and then moving upwards and then break out here. Just know that there is a 90% chance that that market will continue going downwards, right? It will continue going downward. So your main key thing here is to make sure that it actually, you look here, your lower low and your lower low, right? The first one and the second one, right? Then the second one is basically your key, whether this one is going to be a successful breakout or it's not going to be a successful breakout, right? And then we go to the second one, right? We go to a breakout, right? A breakout is like this. It has to go below your channel. It has to go below, right? Once it goes below your channel, it simply means that it has taken out liquidity these sides, right? Those who trade about liquidity, those who understand liquidity, they know that it has taken out liquidity, right? And then now, since it's going to break out here, right, it means that there is a high probability chance that the market will continue its way going forward. Now, the key thing here is, how do I enter, right? You may enter by just going straight and the stop loss will be here at the bottom. But I wouldn't advise that. I do that, but don't do it, right? What you can do is look for what we call inversion fair value gap that happened here, right? Inversion fair value gap that happened here. And then as soon as it breaks out, you wait for the market to tap it, all right? Once it taps it, you take your trade going upward. Your stop loss will be somewhere below here, or you can have your stop loss just to low here, right? And then targeting 1:2 or 1:3, depends on how you want to trade, right? But because I am okay with my trade moving all this space without having to look for that invasion for value gap. That is why I'm okay with taking a trade here. I've been trading this for a while now, so I don't care, right? But for you as a new beginner, you have to wait for an invasion fair value gap. Once it breaks out, you wait for that retest, and then once it gets that retest, right, and then you can take your trade towards an upside. And then another video that I will do for you, I will create a video whereby I will explain exactly how to actually see whether this invasion fair value gap will hold or this one will just pass through. There is a simple way I found, and it works most of the time. I kid you not, it works most of the time. But other than that, this is what I wanted to explain, guys. I hope this actually brings light to you, and then you will be able to actually see whether you're going to be able to use this trend line or not, or you'll find a different strategy. Even on a bounce off, you just wait for invasion for value gap, and then the market breaks down here, and then it will retest it, and then it continue all the way down. It's as simple as that. Just use the channel. It will explain it to you how to actually enter and how to exit. But other than that, guys, I'll see you on our next video. I hope this video doesn't overlap over 5 minutes, because that's not what I wanted. I wanted to make it so short. But anyways, I'll see you on our next video. Cheers.